What is an FHA loan? An FHA loan is a mortgage that is insured by the Federal Housing Administration, FHA, which allows lenders to offer lower down payment requirements and more lenient credit score requirements. While these are government-backed loans, interest rates are still set by the lender. FHA loans are a popular choice for some first-time homebuyers, as well as those with financial setbacks in their history. Despite these benefits, a mortgage insurance premium, MIP, is required regardless of the size of your down payment, which protects the lender in case the borrower defaults on the loan. While conventional loans also come with private mortgage insurance, PMI, it's only applied when the down payment is less than 20% and can go away once you reach that 20% threshold. Pros of FHA loans. 1. Less stringent credit score requirements compared to other loan types. 2. Lower down payments than conventional mortgages. 3. Potential eligibility for individuals and families with previous bankruptcies or other financial difficulties. 4. The ability to include closing costs in the loan amount. 5. Reduced waiting period to obtain a mortgage after a negative credit event such as going into foreclosure, 3 years with an FHA loan versus 7 years for a conventional loan, or declaring bankruptcy, a 2-year waiting period compared to 4 years with a conventional loan. 6. More affordable mortgage insurance premiums, MIP, than with conventional loans. Annual MIP usually ranges between 0.15% – 0.75%, whereas PMI usually ranges between 0.1% – 2%. Cons of FHA loans. 1. FHA loans require a mortgage insurance premium, MIP, both upfront and annual, regardless of the down payment size. 2. The home you intend to purchase must meet minimum property standards. 3. Some sellers may not accept offers from buyers with an FHA loan. 4. The annual percentage rate, APR, on your loan, which takes into account lender fees and other charges in addition to your interest rate, may be higher than those of conventional loans, even though your interest rate may be lower. 4. This is mostly due to the mortgage insurance premium, MIP, that we mentioned earlier. 5. The FHA limits borrowers to a loan maximum of $472,030 for a single-family home loan or $1,089,300 for a single-family home in high-cost area. What are the requirements for FHA loans? To be eligible for an FHA loan, there are certain requirements that must be met. 1. The property you're considering must be appraised by an FHA-recognized appraiser. 2. FHA loans are only available for properties that will be primary residences, meaning you can't use them to buy an investment property, a second home, or a vacation home. 3. You must move into the property within 60 days of closing the loan. 4. An inspection is required to ensure that the property meets the minimum property standards set by the FHA. There are additional requirements to qualify, including a down payment, mortgage insurance, credit score, income, and loan limits. These requirements generally apply to deferred action for childhood arrivals, DACA, status recipients, as well. Down payment requirements. One of the biggest advantages of an FHA loan is that it offers prospective homeowners a lower down payment requirement. While conventional loans typically require a 20% down payment, FHA loans only require a 3.5% down payment for borrowers with a credit score of 580 or higher. Borrowers with a credit score between 500 and 579 will need to make a 10% down payment. It's important to note that if the down payment is a gift from a family member or friend, it must be properly documented and sourced. Credit score requirements. Credit score requirements for FHA loans are more lenient than those associated with conventional loans. FHA borrowers must have a minimum credit score of at least 500 compared to a score of at least 620 for conventional loans. Although FHA borrowers can obtain a loan with a lower credit score, they still need to meet certain conditions. In general, borrowers with credit scores of 580 or higher are eligible for the 3.5% down payment option. Borrowers with credit scores between 500 and 579 will need to make a 10% down payment. If you have a lower credit score, you may be able to qualify for an FHA loan, but you may still need to work on improving your credit score before applying. Income requirements. To qualify for an FHA loan, you'll need to have a stable income and a verifiable employment history. Your lender will review your income and employment history to determine your ability to repay the loan. There are no specific income requirements for FHA loans, but your debt-to-income (DTI) ratio must be within acceptable limits. Your DTI is the percentage of your monthly income that goes toward paying off debt, including your mortgage payment. In general, your DTI should be no higher than 43% to qualify for an FHA loan. Mortgage insurance requirements. Mortgage insurance is required for all FHA loans, however, it can be cheaper than the standard private mortgage insurance, PMI, associated with conventional loans depending on factors like your credit score, down payment amount, loan size, and lender. Mortgage insurance protects the lender in case you default on the loan. There are two types of mortgage insurance premiums for FHA loans. 1. Upfront mortgage insurance premium, UFMIP. This is a one-time fee that is typically added to the loan amount. 1. The current UFMIP rate for most FHA loans is 1.75% of the loan amount. 2. Annual mortgage insurance premium, MIP. This is an ongoing fee that is paid in monthly installments. 2. This premium and its duration can vary depending on your loan terms and down payment size, with shorter terms and larger down payments often leading to lower MIP costs. Loan limits. FHA loans have specific loan limits that vary by county. In general, the loan limit for a single-family home in 2023 is $470,030 in most areas of the country. However, in high-cost areas, the loan limit can be as high as $1,089,300. It's important to note that these loan limits are subject to change each year. You can check the FHA Mortgage Limits website to learn about the current limits in your area. Interest rates. Interest rates for FHA loans are typically lower than conventional loans, but they can vary based on factors such as your credit score and the loan amount. It's a good idea to shop around and compare rates from multiple lenders to find the best rate for your situation. It's also important to note that interest rates for FHA loans are not set by the FHA but by individual lenders. This means that different lenders may offer different rates for FHA loans. Additional requirements. In addition to the conditions listed above, there are a few other requirements you'll need to meet in order to qualify for an FHA loan. 1. The property you're purchasing must be your primary residence. 2. You must be able to prove your identity and citizenship or legal residency status. 3. You must be at least 18 years old. 4. You must have a valid Social Security number. How FHA loans work with county borrowers. In some instances where a prospective buyer doesn't meet eligibility criteria, they can include a non-occupying co-borrower to improve their chances of securing a loan. If you are applying for an FHA loan with a co-borrower, your co-borrower must meet certain eligibility requirements, such as having a qualifying credit score and DTI. Although the minimum credit score to obtain an FHA loan is 500, lenders may require that both borrowers have a minimum 580 median qualifying score. DTI requirements may be more flexible for county borrowers with credit scores above 620. The FHA requires that co-borrowers are related either by blood, marriage, or law, such as a domestic partner, step-parent, step-grandparent, step-sibling, or in-law. In order to be a co-borrower, you must also be a U.S. citizen or have a primary residence in the U.S. How do closing costs work with FHA loans? Closing costs on your FHA loan range between 2% to 6% of the price of your new home. Closing costs include your UFMIP, MIP, lender fees, and third-party fees, such as notary and recording fees. The FHA may allow you to roll your closing costs into your mortgage principal. However, this means you'll pay interest on these closing costs over the lifetime of your loan. To reduce closing costs, you can negotiate with your lender to potentially waive some of their fees or look to first-time home buyer assistance programs that help cover closing costs on FHA loans, as well as other state and local home buying programs. Additionally, you can accept gift funds from family, friends, or employers, so long as you're able to provide proof, such as a gift letter, that these funds are a gift to the borrower that do not have to be repaid. Types of FHA loans. There are several different types of FHA loans available, each designed for different types of borrowers and situations. Let's take a closer look at some of the most common types of FHA loans. FHA Purchase Loan. An FHA purchase loan is designed for borrowers who are buying a new home. With a purchase loan, you can use an FHA loan to finance up to 96.5% of the purchase price of the home. FHA Refinance Loan. An FHA refinance loan allows you to refinance your existing mortgage with a new FHA loan of up to 97.75% of your home's value. You'll need at least a 580 score and can roll your FHA closing costs into the loan amount. FHA Streamline Loan. An FHA Streamline Loan is a type of refinance loan that is designed to streamline the process and reduce the amount of paperwork required. With an FHA Streamline Loan, you can refinance your existing FHA loan into a new FHA loan with a lower interest rate and reduced mortgage insurance premiums. FHA Cash Out Refinance Loan. An FHA Cash Out Refinance Loan allows you to refinance your existing mortgage and take out cash at the same time. With a cash-out refinance loan, you can borrow up to 80% of the appraised value of your home, minus any outstanding mortgage balance. FHA 203(k) Loan. An FHA 203(k) loan is a type of renovation loan that allows you to finance the cost of home repairs and renovations into your mortgage. This can be a good option if you're purchasing a fixer-upper or looking to make major renovations to your current home. With an FHA 203(k) loan, you can choose between two programs. The Limited Program, which is designed for smaller projects that cost less than $35,000, and the Standard Program, which gives you more cash to work with for larger projects. What is the difference between an FHA loan and a conventional loan? While FHA loans and conventional loans both offer financing for purchasing a home, there are some key differences between the two. One of the biggest differences is the down payment requirement. As mentioned previously, FHA loans only require a 3.5% down payment, while conventional loans typically require a 20% down payment. Another difference is the credit score requirement. FHA loans are more lenient with credit score requirements, while conventional loans typically require a higher credit score. It's also important to note that conventional loans are not insured by the government, while FHA loans are. This means that if you default on a conventional loan, the lender is not protected by insurance, whereas if you default on an FHA loan, the lender is protected by FHA insurance. To get pre-qualified for a home loan, go to https://www.cambridgehomeloan.com/application 80082650077 www.cambridgehomeloan.com